Hello friends. Friends, we will continue with our discussion on share capital. Right? In the last lecture, we discussed about the classification of share capital. I divided this share capital into three parts. One was authorized capital. Right? Then I told you about issued capital. Right? Then subscribed capital. So we discussed that our share capital is divided into three parts. One is authorized capital, the second one is issued capital, and third one is subscribed capital. Clear? Then what is the authorized capital? This is the maximum amount that can be raised through issue of shares. This authorized capital is the maximum amount that can be raised by the issue of shares. I explained you this with an example that you have to get 1000 pocket money from your father. That 1000 is the maximum amount per week that has been authorized by your father. That per week you will get 1000 as pocket money. Clear? Then what is issued capital? Issued capital is the amount requirement of company. Right? So issued capital is the amount that the company wants to raise through the issue of share capital. The company might say that right now we have this much requirement, so we will issue this much shares right now. Like you have to get 1000 per week. On the first day of the week, you tell your father that I have a requirement of 500 only, so you give me 50 notes of rupees 10 each only. Clear? That is the issue capital. That means what is your requirement of capital? According to your requirement, you will issue the number of shares. That is issued capital. Right? Then what is subscribed capital? Subscribed capital is the amount received against issue of shares. Amount received against issue of shares. Clear? Subscribed is the amount that has been paid by the outsiders. What amount you have received from the outsiders, that is the subscribed capital. That means this much amount of shares they have subscribed. Clear? So you are clear with the difference in these three things. What is authorized capital? It is the maximum amount that can be raised by a company through issue of shares. What is issued capital? It is the amount that the company wants to raise by the issue of shares. What is the subscribed capital? It is the amount that has actually been received by the company against issue of shares. Clear? So now what we are going to discuss in this lecture is we are going to discuss something about subscribed capital. What we are going to discuss? This subscribed capital is further divided. How it is divided? This subscribed capital is further divided as fully paid, subscribed capital, fully paid, and partially paid. Right? Then this partially paid is further divided into two parts. One is called up and the second one is not called up. Clear? So our subscribed capital is further divided into subscribed capital fully paid up, subscribed capital partially paid up, then called up. Partially paid up is further divided into called up and non-called up. Now what is this all about? Let's see. First I am going to discuss about subscribed capital fully paid up. Right? Now, let us move to that example again. Here are you and here is your father. You have to receive rupees 1000 as pocket money. This is your authorized capital, right? But on first day, you ask for only 500 rupees. 500 rupees from your father. Clear? That is, this is your issued capital. You tell your father that issue me 50 notes of rupees 10 each and I will issue 50 receipts. Right? This is your issued capital. This much is clear. Now what happens? Your father pays you. Your father gives you 50 notes of rupees 10 each. Right? That is 500 rupees. This is your subscribed capital fully paid up. That means the amount that the company has asked from the outsiders, they have paid that amount fully. You asked your father for 500 rupees, 50 notes of rupees 10 each. Your father paid you 500 rupees in the form of 50 notes of rupees 10 each. That is subscribed and fully paid up. Whatever was the requirement of the company, whatever the company asked from the outsiders, they have paid that money. Right? What it means? Amount required by the company on issue of shares has been fully received by the company. That is, if the company issued shares for 2 lakh, right? That is, it issued shares for 2 lakh. Then it has received amount on those shares fully from the outsiders. There is no pending amount. You asked for 500, your father paid you 500. Clear? You asked for 500 and your father paid you 500. This is called as subscribed capital fully paid up. Clear? Now, moving on to the second case. Subscribed capital not fully paid. Now, continuing with this example, if I tell you, you ask your father for rupees 500, that is your issued capital. Right now, what your father does is, your father says that I have 50 notes of rupees 5 each. Right? And the rest of money you take in the evening. Now what happened? You asked for 50 notes of rupees 10 each, but your father paid you 50 notes of rupees 5 each. That means rupees 5 is still pending. 50 notes of rupees 5 is still pending. You asked for 50 notes of rupees 10 each, that is 500 rupees. But what is paid by father? What is paid by the outsiders? On these 50 notes, instead of 10 rupees, they are paying you 5 rupees. That is 250. What is the balance? Balance 250 is still to be received. Right? This balance 250 is still to be received. You asked for rupees 10 and he paid you rupees 5. This is subscribed capital not fully paid up. That means you called for 10 but they paid 5, not fully paid. This amount of rupees 250 is what we call it as calls in arrears. That means these calls are still receivable. This is amount receivable. Amount receivable from shareholders. Clear, friends? This much is clear. So what is the meaning of subscribed capital not fully paid up? You ask your father to give you 50 notes of rupees 10 each, but your father gives you 50 notes of rupees 5 each. Clear? So this balance 250 is what we say as calls in arrears. That is the amount that is still receivable, that is pending with the shareholders. This is, they have subscribed to the shares but they have not paid the full money. What is the meaning of this? That is, the outsiders have subscribed to the shares but some money is still pending to be received. Right? So this means that the outsiders have decided to subscribe to our shares, they have decided to buy our shares and pay the money, but till now we have not received the full money from the shareholders. Right? Clear? This much clear, friends? So this was subscribed capital not fully paid up. Now I will take another case. This was case 1 in case 2. This was A part, right? First I will do the B part, then I will tell you the difference between A and B. That is, this difference between A and B is this called up and non-called up, right? Let me do the B part. Now what happened? On the first day in morning, you asked your father to give you 50 notes of rupees 5 each. And in the evening, again give 50 notes of rupees 5 each. Now, if you consider this much, in the morning you are doing share capital, right? Your requirement for that day is 500 rupees. But what you have done is you have divided that into 2 parts, right? You tell your father that give me 50 notes of rupees 5 each right now and give me 50 notes of 5 each later on in the evening or next day morning, whatever, right? So you haven't asked for rupees 10. Your requirement is rupees 10. Your face value is rupees 10. Your value of one receipt is rupees 10. But what you are asking is, you are asking for rupees 5 only. You are not asking for rupees 10. So this is subscribed capital, subscribed not fully paid, right? This is 50 multiplied by 5, 250, right? Your total requirement was 500. So what is the balance 250? You might say, sir, this is calls in arrears, isn't it? You will say this is calls in arrears, but I won't say this is calls in arrears. Now see the difference between A and B. Try to understand the difference between A and B. What happened in A? You asked your father for 50 notes of rupees 10. Right? First of all, tell me what is the value of your receipt. Your each receipt values rupees 10, right? You asked your father for 50 notes of rupees 10 each, 500 rupees. But your father paid you 50 notes of rupees 5. Your face value is still 10. Face value of your receipt is 10. Face value of your share is 10. You have to receive 500 rupees. But right now you have received 250 rupees. Your balance is 250. That is what we call calls in arrears. It means we have called that amount. We have asked for that amount, but we have not received. Right? What is happening in case B? Case B, that you have asked for your father, you have asked from your father that pay me 50 notes of rupees 5 each. Here you have not asked for rupees 10. You have asked for 5 only. That is what you have received. Clear? This is the difference. There you asked for, you called rupees 10, but you received rupees 5. Here is what is happening. You have called for rupees 5 only. Rest of the money you will call later on. You have called for rupees 5 only. There you called for 10 rupees, you received 5. Here you called 5, you received 5. So nothing is calls in arrears. So you can't say 250 is calls in arrears. This is the amount that has not been called up by company. This 250 rupees is the amount that has not been called by the company. So try to identify the difference between calls in arrears and amount not called by company. This is amount called but not received. You called for 10 rupees. You called for 50 notes of rupee 10 each from your father, but he paid you 50 notes of rupees 5. You called, but you did not receive it. Right? Amount not called by the company, that is amount not fully called by the company. Right? This is case A, this is case B. So can you draw the difference now? This is subscribed capital not fully paid up. Here I told you I have divided this called up and not called up. Clear? Called up is you asked for that money from your father, but he didn't pay you. Not called up is you didn't ask for the full money. You asked for rupees 5 only, he paid you rupees 5. That's it. Nothing is calls in arrears. Clear? Calls in arrears is the amount that has been called by the company, but it is not received by the company. That is why we call it as calls in arrears. We have called, we have made the calls, but we haven't received the money. That is calls in arrears. Clear? Clear, friends? So this is how we divide the share capital into authorized, issued, and then subscribed. Subscribed capital is further divided into fully paid up. That is, whatever is the face value of the share, we have received full amount on that share. We have received the face value of the share. Clear? Then we say partly paid up. In the partly paid up, we say whether it has been called by the company or not called by company. Called by company means the company has called for rupees 10, that is the face value, but has not received the money, not received the face value. Called up the face value, but not received the face value. Not called up is the company has not called to the extent of face value. Clear? So this is the full, I can say, classification of share capital. This is how the whole share capital is divided into 3 parts: authorized capital, issued capital, and subscribed capital. It is very important to understand this subscribed capital part, right? Because if you are able to understand this part, only then you will be able to make disclosures in the balance sheet regarding this. right? We have to show this, all this working. We have to show authorized capital, we have to show issued capital, we have to show subscribed capital. All this is to be shown in the balance sheet. So if you are not clear with the concepts, what is fully paid up, what is partly paid up, what is partly paid called, what is partly paid not called by the company, how to calculate calls in arrears, right? Then you will not be able to disclose it in the balance sheet correctly. That is very, very, very important. Disclosure of share capital in the balance sheet is very important. For this, knowing this concept is very important, that what is subscribed capital, fully paid up and partly paid up. Clear? I hope you are clear with this concept of subscribed capital, right? Still, if you have any queries related to this, just send me an email at ksjteaching@gmail.com. Clear? So now in the next lecture, what we are going to do is, we are going to discuss about the disclosure of share capital in balance sheet. Disclosure in balance sheet. This is a very important aspect, that how to disclose the share capital in the balance sheet. This is very important while we draw up the balance sheet, right? This is one of the main items when we draw the balance sheet of a company. This is the first item, share capital. Clear? So this is very important, friends, right? If you have any queries, just send me the email. Clear? So that's all for this lecture, friends. Thank you so much.